Hello, lighting people. We're not even 100 days into 2025, and already three prominent business themes keep surfacing in conversations among both lighting people and the broader business world. Tariffs, the financial markets, and Acuity, whose stock hit an all-time high in January and who recently made its largest acquisition ever, the $1.2 billion purchase of QSC. So we thought it would be a good idea to catch up with someone who spends his days and probably a few nights analyzing financial markets, our beloved lighting industry, and Acuity specifically. We're pleased to welcome Tim Wojs, Senior Research Analyst at Robert W. Baird Company. Tim, hello, and thank you for joining us today for 5 Big Questions.
Hey, Al. Nice to be here. Thanks.
You know, Tim, I'm so glad you're here. And I also love when we get to invite people who are adjacent to the lighting industry and not in the lighting industry, because you certainly bring, with your experience, a lot of perspectives. Anyone who's ever listened to an Acuity or Acuity Brands quarterly earnings call has heard you ask questions dating back to Vern Nagel of last decade and most recently Neil Ash for the last 5 years. So you bring intelligent questions and insights to the markets, and I'm so glad you're here. So first of all, on that theme, let's hear about what your basic responsibilities are outside of asking questions on earnings call. What do you do at Baird? And I think you also might have to make a little disclosure as well, since we're talking about financial markets.
Yeah, just to be safe. I mean, we write research and make markets in Acuity. So, there are disclosures. You can look at rwbaird.com if you want more details on that. But yeah, to go to your question, we're sell-side analysts is what they kind of call us. And so what we are is basically, you can think of us as almost a stock consultant, to our, investor clients. And those are mutual funds, those are hedge funds, those are pension funds, people that are managing, pools of money. And there are, 40 of me here at Baird, 45 of us here at Baird, and I cover building products. And so building products is anything that really goes into a residential or a commercial structure. So that can be lighting, that can be blocks, carpet, windows, HVAC systems, power tools, and everything in between. So lighting and Acuity is one of the end markets that we follow. I think we cover 22 stocks, and I think we might cover like 13 or 14 different kind of specific end markets. But the common theme is really residential and non-residential construction. And that's really kind of what ties it all together. So, we help our clients kind of navigate, where they should be, where maybe they not, shouldn't be, overweight, underweight. And we're kind of supposed to be basically experts on our space, and a lot of our clients are really, kind of more generalists in that nature. So, we're trying to steer them into the right spots and effectively just trying to, help them make money and beat their indices. And one of the things we really try to do with that, you have conversations with management teams, you have notes that you write, you have models that you keep, but a lot of what we try to do is try to get as close to the ground as we can in a lot of these markets to kind of understand, any sort of, what's going on, if there's any sort of changes, and then, take those changes and try to bring that up and say, is this good, bad, left, right, for somebody like Acuity.
So just to follow up on that, interesting perspectives. So when you're trying to get those perspectives, do you talk to Acuity or ask Acuity questions outside of the earnings calls, or do you talk to other people, whether they be distributors or agents or other types of companies in our industry, to get broader perspectives?
Oh yeah, all the above. We'll go to trade shows. We do a quarterly survey where we're talking to agents, mostly, but there's a distributor that gets put in there every now and then. We talk to people from Signify. We talk to other lighting companies. We certainly talk to the company, outside of the earnings call. It could be a question from a 10Q. It could be, hey, here's what we're hearing, and how would you respond to that type of stuff? So if you think about like tariffs as an example, right? A lot of this is happening intra-quarter. And so, as long as they're not in quiet periods, you can certainly talk to Acuity and try to get some information and things like that. But you're also talking to a lot of other people just to validate kind of what's going on in the market too.
That's great. That's because I hear some of these questions from you and other analysts, and they're really well researched, and it feels like you're in the industry, even though you're analyzing the industry. So that explains how you're able to get some of that nitty gritty frontline info that you bring into these analyses that you do. When we reported Inside Lighting, in fact, there was just a recent earnings announcement from Acuity on April 3rd, and when we report, we're reporting to a business audience of mainly lighting people, so we don't get too deep into some of the cash flow and the capital and all that other stuff. But but our audience is smart and interested in some of the big picture stuff, and we tend to focus mostly on revenues and profits. When you as an analyst assess Acuity or any other security for that matter, or any other company, what do you look at beyond that to assess the current health and future promise of that company?
Yeah, we definitely care about revenue and earnings. At the end of the day, I'm gonna say that earnings, drives stock performance, right? And that's kind of a key, key performance indicator. Um, when you're kind of comparing, companies across the spectrum, versus we care about, end markets exposure, we care about, balance sheet health, the ability to generate free cash flow, margins, competitive dynamics, industry structures. So all those kind of go into the analysis of, what's a good company, what's a great company, and that is the what I would say art of applying a multiple to a stock, as opposed to just kind of going into a model and kind of forecasting earnings and things like that, and kind of coming up with more scientific kind of ends. So you have this idea of, the scientific piece is revenue, it's interest income, it's cost, it's all those types of things, and then the real art, which is what drives a lot of the performance of a stock, is really the multiple you're going to pay for it, and that has a lot of things outside of, the financial statements. But on an earnings call, we care about revenue, we care about profitability, and we care about what's happening this quarter. But more importantly, usually stocks reflect what's going to happen or what people think is going to happen. And so it's not just what you're doing for me now; it's kind of what are you going to do for me in the future.
For sure. And given that last earnings call that we saw, or the earnings announcement that we saw from Acuity last April 3rd, just days ago, we saw that happen actually on the day that all the Trump tariff news was also hitting. So sometimes the stock performance on that particular day might not be a valid reflection of
Yeah.
how the company's doing. But when we look at Acuity's latest quarter, their second quarter closed on February 28th, and they reported that on April 3rd. How do you assess their performance, and how did it meet your expectations?
Yeah, I think it was relatively kind of in line with the expectations. I mean, there's some moving parts. Margins were a little better. Revenue was a little weaker than maybe consensus had. But I mean, in general, I'd say it, pretty down the middle, in terms of performance. Um, but I think really what's kind of impacting, the stock price is really just how we're trying to incorporate tariffs, the response to tariffs, which countries are in, which countries aren't in. What's kind of the kind of the follow on, or the, what I would say is the indirect exposures, right? So you can have this company might have XYZ direct exposure, but heck, if the cost of steel is going up, the cost of concrete is going up, maybe we're not going to put up as many buildings, right? So there's all these indirect or kind of second derivative type exposures that people are trying to incorporate as well. So you're starting to hear recession talk and all those types of things. And so at the end of the day, we cover a lot of construction related industries, and so you generally need a healthy economy for that to grow. So I'd say that the stock reaction is certainly not company specific. In our view, a lot of it is market specific, and we've had stocks down 15-20% in the last 2 days. So it is a lot of kind of readjustment in terms of what people want to discount in terms of kind of growth and profitability, not just for Acuity, but I'd say for the sector at large.
Yeah, and when you look at the sector, including Acuity, you just rattled off a bunch of other factors that Acuity and any other company can't control because they're macro factors. But let's dig a little deeper into that. So what's your view on how tariffs might impact markets in 2025? How some of these other external factors are, and what are those other external factors that you look at when you assess the industry as a whole and the potential performance of a company like Acuity?
Yeah, you have the direct piece where it's, hey, we're going to have a tariff on something and we need to, kind of offset that. You can offset that through price. You can offset that through other operational type things. Maybe there's a currency angle that helps. But I would say in general, Acuity, and I think most other companies, are going to take these higher costs and they're going to try to pass them through to the end customer. Is that going to create a little bit of, pull forward? Is that going to create some demand destruction? I think, in isolation, in terms of what, they talked about yesterday in terms of the price increase that they might need to take, that price increase in and of itself is probably not going to, make or break, a specific project. But when you start adding this up in terms of the entire project, I think that's where you can start to see some concerns around demand, destruction just in general. So I think right now it's how can we kind of offset the costs, and there's companies that have a lot of exposure. There's companies that don't have a lot of exposure. So you're trying to go through that direct kind of piece, and then you're also trying to think through, what does it mean from a from a demand perspective. So I do think you're going to see a lot of companies put through price. I think over the next couple of weeks, you're going to see a flurry of activity where people are going to be trying to put this in because these tariffs are immediate, and usually it takes some time to kind of get prices into quotes, and kind of there's some contractual things sometimes that need to kind of play out. So it is going to be pretty volatile, I think, from a business operating perspective over the next couple of months at least.
Yeah, there's already been companies with back in February when the Chinese tariffs went into
Right.
play and affected a lot of companies that have significant exposure to China. They immediately put in some price increases. And normally in our industry, as you probably already know, we have we're going to increase prices on such and such a date, 3, 4, 6 weeks in the future. But no, this go round, there's been a lot of immediate ones, including one that was just 2 or 3 business days recently. So these things are happening on quick turnarounds, and these $40 million building projects are going to turn into 50 million or more projects down the road, which creates some of this uncertainty as well. Thankfully, we have more certainty or some questions answered with these actions that were recently taken, but there's still some uncertainty looming, which I'm sure you'll stay on top of and inform the markets of. When we look at Acuity specifically again,
Yeah.
one of the things that they did a few years ago was they segmented their business into 2 categories: Acuity Brands Lighting and their Intelligent Spaces, which at the time was less than 6% of their total business. At the time, it just basically involved Distech and Atrius. They've since made a couple acquisitions, a smallish one with KE2 Therm, HVACR company, a refrigeration company, and then the big one was QSC. Now, it's not exactly a minnow swallowing a whale, but QSC's sales were larger than the entire Intelligent Spaces division itself. So now, as this division goes from 6 to 8% in recent history with Acuity revenues to now being 1/6 or about 17% or so, and moving upwards of their total revenue. What's your vision when you read between the lines and see what's happening at Acuity? Are they becoming a buildings technology company that happens to have lighting products as part of their portfolio? What's your vision? How do you read it from your perspective?
I mean, that's probably a good way to say it. I mean, I think when Neil has kind of come into the business, I think he's kind of looked and said, okay, well, here, where are we in, certain areas of the company, in the markets, and where could we be bigger, and do we want to be bigger in these certain places? So, I mean, Acuity has controls beyond just Distech, right? So they've done controls in lighting, and that's in, technically in their ABL segment, right? But so this is really, I would say, kind of an extension of some of those control activities. So I think I don't know if you want to call it a different business. I would kind of call it more of a near adjacency. And, from a, strategic perspective, I mean, they're in, they've got lighting controls. They do have these HVAC controls with Distech that are, maybe more behind the wall. They're maybe more, in the back of the house. Now you get QSC, which is AV. You're kind of expanding into different areas of the building. And I think Acuity's point is, look, there's some opportunities here that we see that we can develop that can allow building owners to better manage their spaces. And so that's an opportunity, in their sense, to maybe create new revenue streams that they don't have today. And when you look at controls on the surface, I mean, controls is a higher margin business. Could we layer some software on top of that? I mean, those are, I'd say, attractive business merits that, going back to one of the prior questions, those are things that can drive, higher multiples for stocks over time if you can successfully execute against it. So I think the Acuity team, that's in place right now, that's been there for the last 4 or 5 years, I think they've done, a great job from an execution perspective. They've done a great job from we're going to do this, and they do it, and they do it a little bit better, which is really kind of the key, potion to stock performance in our industry. And, if you can, they've gotten the leash here to kind of go out into these near adjacencies. And from a financial perspective, and I think a strategy perspective, it does make sense.
Yeah, it sure does. And while, luminaires and controls are such an important part of their business, when I hear CEO Neil Ash talk during these earnings calls, I mean, he's using terms like edge to cloud and all these other technology terms that are, and backed by, software and cloud type things, which tend to be higher profit margins than a $10 downlight or a $20 wall pack as well. So it's interesting to see where things are going. And Tim, I learned a lot. Your perspectives are certainly interesting. You've been doing this a long time, and it shows. And thank you for joining us today for 5 Big Questions.
Awesome. It was great to be here, and hopefully we do it again.